Welcome to Tuesday, Metalheads. I'm Brad, your host for the No Bull Precious Metals Report. Today is Tuesday, June 22nd, 2021, and we have quite the day in store for us. So let's, without any ado, turn our attention to the futures board. And if you've been watching the markets at all this morning, whether it's on TV, whether it's from your phone, whether it's from another web app, anything like that, you might have noticed there's not much going on. I'm sure that if you've listened to other commentators, they're sounding kind of like soccer commentators from the Simpsons episode. But at a glance, we can see pretty much across the survey of the boards, everything's riding pretty close to zero. Some are a little bit negative, some are a little bit positive, but generally there's only a few things that are really in the bright green or the bright red. And if you haven't guessed by now, the darker hues are closer to zero. So as you get towards black, like if you look at wheat right now, down towards the bottom, you'll see wheat sitting right at zero. There's been no change. So that's pretty much the baseline. Everything from there kind of goes around that. So the one thing that we can determine is that the big guys who really drive the markets are playing it pretty conservative. And the biggest question we really have to ask ourselves is why. So for that, let's go over to the dashboard and see what we've got on the calendar. And this morning, the biggest answer that we can come up with for that is that at 10:30 a.m. we have the Cleveland Fed president that is speaking. At 11 a.m. we have the San Francisco Fed president who's speaking on climate risk. And then at 2 o'clock, the big guy himself, the Grand Poobah, the Pope of Moneytown, is going up to Capitol Hill to give testimony to the Congress. So Jerome Powell is going to have to answer for his statements. And you can bet your sweet bippy our esteemed representatives are going to get to the bottom of this inflation interest rate hike brouhaha. What that exactly means, well, that's up for you to decide, but we can pretty much say that there's going to be a lot of comments that are going to come out of this. Some, from having watched Powell in the past, you know that they're going to be very well prepared remarks, and all of the language is going to be very measured, but the street knows that, the markets know that, and I expect to see some adjustments coming from that. Whether they're clarifying, whether they're going to set direction, whether they're going to, do whatever. I don't expect them to instill confidence, but, at the same time, I've been surprised before. I'm sure I'll be surprised again. So that's really the big thing for today. The street is currently watching all of this, and everyone's really holding onto their wallets and their portfolios. And my best advice is to watch your own wallets, and of course always keep an eye out for buying opportunities because they will exist. But before we move on, I just want to circle back and revisit that Tuesday report that came out this morning for existing home sales. The previous report was 5.85 million. The median was forecasted at 5.73 million, and the actual report came in at 5.8 million. So we're significantly better than the median forecast. We're a little bit lower than the previous period. So there is a general softening of the real estate market, but it's not significant as much as what they were expecting, which that kind of lends to the malaise of what we're seeing, because there's nothing clear. There's no one that's saying, wow, this is great, everything can jump up, or this is horrible, everything needs to just crash down. So it's more just kind of business as usual. So moving on down, we can look at the 10-year Treasury rate, and I just want to revisit this from yesterday, because yesterday we were sitting at the 1.47 mark. We were having that continuous straight line across. By the end of the day, we wound up closing at 1/100th% higher at 1.48. And then today, we're starting to see further consolidation between the highs and the lows. So we basically have a 0.02 of a point spread between high and low at 1.49 to 1.51, and the current period close is sitting right in the middle at 1.5. So we definitely do have somewhat of an upward trend, although it's not significant. It's not a real steep curve, anything else, and who knows what the end of the day will bring. But I just wanted to kind of revisit that so that we could bring closure to yesterday's commentary on that. And turning to the markets, let's go in because this is everyone's favorite subject these days. Let's pull up silver and see what's there. So the one thing that we can see is that silver is down right now, but the word of the day is churn. And by that, this is almost the definition of a sideways market. There are very little highs and lows of note. Everything is just, being constrained within really about a standard deviation. Between this point up here and this point down here is about a deviation. So that's not a significant amount of change. That's not a significant amount of movement, anything else. And given every place that it is, it's just, the market is just kind of blah. The big thing to note is that as you look at this, the VWAP really has not changed, despite the price having been riding below it since really Friday. And the reason for that is that there isn't a significant enough volume to pull that line down. So that's something that's really kind of indicative of what's going on, is that the markets is in a waiting state. Traders are looking for a move, but they're clearly just biding their time. There's no impulse to it. So moving forward on that, let's hit gold. And gold is in a very similar spot. It's in the same boat. However, the big difference is that where silver was riding this -1 line, gold is really riding the VWAP itself, or at least it was until it did find that resistance right there. And just taking a look at where these are falling, and really that's what's happening, is that we're seeing where gold is adhering to certain levels. It's just making sense within the volume that it's trading at. So we're just seeing this malaise again, and that's been kind of the order of the day since Friday. So in general, I mean, within the market statements, don't look for any movement right now. Everyone's just kind of letting the lazy current drift the prices. And we're going to see that. They're just floating down the river right now. They're not really driving anything. They're just being driven. Until that volume picks up and we really start making concerted efforts to change, I don't expect to see much out of it. So I wish I had better news, but right now it's just a waiting game. But the one thing that I did add is I wanted to start looking, because I've talked in general over the last few days and such about comparative performance and really how silver and gold move in tandem with each other, but yet aren't necessarily directly adherent. And this was something that really exemplifies that. And what this is just a performance evaluation over the last 5 days. So the same period that I'm looking at the market on, we also have just the amount of change from those points in raw percentages, price over price. So when we look at silver, we can see that silver right now is sitting, negative 4.82% below where it was 5 days ago. We look at gold, and we add that on top, and gold is sitting at negative 2.46%. And that's indicative because these are relative to themselves. But yet when you're plotting them consistently, you can see where there's similarities in movement. You can see where there are certain humps that occur. You can see the same type of behavior that occurs all the way through. But yet they're not the same. They're not perfectly in lockstep, such as right here, where we had a 5.79% drop. Gold only had a 3.04% drop. So yeah, there were still two drops, but yet gold was tempered, and you can see that even as everything starts coming through, there is some difference there. Now, one of the things I did want to add on is I want to take gold off and I'm going to add copper on. And this is kind of an interesting dynamic. And the reason that I'm doing this is because uh, gold and silver are typically considered precious metals, financial metals, monetary metals. Copper is not. Copper is not a financial metal. Copper is an industrial metal. Yet at the same time, silver has for a while, even though perception hasn't caught up, it's become a very important industrial metal. And there are similarities in the movements because a significant amount of, in fact, the vast majority of the actual use of silver right now is in the industrial markets. So as you start looking at that, it makes sense to start comparing this in light of not only the precious metals but also the industrial metals, and we can see that there is a very definite alignment. You can see that the movements have really matched themselves very close. Copper has done a little bit better over the last day or two, so there is some recovery versus silver's malaise. However, they're still moving very similar. And when you start looking, I mean, gold to copper is very different, but yet silver to copper, we're still seeing the same levels. And when I say that they're similar, is that I'm looking at total price change. I'm looking at the y-axis. I'm also looking at similarity of movement. So y-axis on x-axis, so over time. They're very similar movements to very similar degrees. And so it's something to really keep in mind as we start looking at this, of saying that, sometimes we just have to expand our context. We have to look at a broader range of things to understand what's going on. And again, this is all about context, and I've beat that dead horse enough. So just real quick, hitting volume, zooming in on the week, you can see, I mean, gold is 31,000, 32,000, copper 20,000, silver 15,000. That is not big volume by any stretch of the imagination. So until that starts getting up there, until we start hitting, 80K on gold, 60K on gold, somewhere in that range, as well as, 20, 30K on silver, we're just not going to see the changes that we were. Now, retail right now, as we start digging into retail silver, again, this is a reflection of where the markets are, and there is a pretty close adherence on the average to the way the markets are. Although there are some anomalies out there, things like that, we can kind of see that there's that general reflection that occurs, and the trend is continuing. We have this downward trend that's within this current week's prices on the major benchmarks for the generic, the Philharmonic, the Maple Leaf, the Silver Eagle, even junk silver. Junk silver seems to be coming down pretty good on average for that. So all of these things, it's a good time to buy, and that's essentially where all of the reports that I've read have been, is that even though the market's down, it's still a good time to buy. And we can see that general kind of a trend that's just been covering here for the generics. Using that benchmark, we're still really about where we were yesterday, 30.53 on the low, 31.93 on the high. So we have just about, a buck and a half on the spread, with the median saying at 31.34. So we're a little bit closer to the higher side than the lower side, but the average at 31.29. There's a pretty even distribution across the board. So again, there's deals to be had. They're not anomalies or anything like that. Going through for where the actual margins are. Same things, haven't really seen too much of a difference. There's been a slight variation, maybe 1% across the board, but nothing too significant. So again, if you're starting to hear the commentary of, well, premiums aren't doing anything, well, premiums are staying exactly relative to where they were. So we haven't seen any type of regime change on that yet, which is part of what I'm looking for. We start looking at the variance, and it still kind of bears out the same way. We're seeing a little bit of a change. I have heard that Silver Eagles did have some of the major distributors that I track. They did a sale on them. I want to say that they're in the $36.99 range. You might want to check. I believe that's a JM Bullion. So part of that's going to drive into it because that's a pretty decent discount, and you can kind of see where that type of stuff takes shape. So moving to gold, let's see. Gold again, same thing. We're seeing this downward trend. We're getting a couple of bucks off, things like that. So our generics right now on the week are 1878.62, down from last week of 1969.41. So that's a pretty significant discount. If you're looking to buy gold, now's probably a pretty decent time, especially if you're going Gold Eagle or something. Last week they were 2065.80. This week they're 1977.66. So I mean, you're looking at, was that $88 ish. So that's a pretty good price break. And we can see that as we start looking at the entire scale of what's going on with the generic. And the generic, you can get as low as 1834.74, or as high as 1876.19. Well, probably the sky's the limit on the high end, but that's just what I'm seeing in my sample data. So, again, good time to shop. We can see, similar kind of breakdowns. There's a lot of movement across the range of gold items, which this is kind of different from what we would normally see, is that if you recall from previous weeks, everything tends to maintain pretty tight all the way through. And just so I can exemplify that, everything remains pretty tight all the way through. But then all of a sudden we get to this point right here, and everything widens up. Everything gets a little bit, into their own tracks. So they've all had their own price adjustments, and they're still tracking close because you can see that the same movements occur, but they're all in their own lanes right now. So they're all moving relative to what they were, at midnight or at 12 o'clock. So again, depends on what you're shopping for, everything else. But that's pretty much, the state of where we are right now. I'm sure that I've said way too much about a day that really doesn't have too much exciting to say about it. But, hey, that's what I'm about. So that's going to do it for today's report. Tune in next time when my plan is to dissect whatever comes from this afternoon's testimony and whatever the markets decide to do in reaction to that. So remember, like, share, and subscribe if you dig what I'm doing. It all goes and feeds the algorithm and helps the channel grow and, get more information out. So until next time, happy stacking.